Hey everyone, welcome to another market review. Some crazy shit overnight with the Justice Department accusing J-POW of doing some stuff. We all know it's political and it's coming from Trump, and the market doesn't like it. We have everything down. I thought we would go down anyway from that post-market close 10% cap on interest rates. Besides from this, but it all accumulated. We have yields popping, we have dollar dumping, and basically this is the setup we have here. So this was the plan for last week, expected to close somewhere around here in this area between T1 and T2. This was after this week, so it could have been the way up, but not guaranteed, so I can take it out. And played out more or less as expected. Didn't really think Friday would be that bullish, and they pinned it to IWN to 60, and everything went up as well. So kind of unexpected to me. Potentially we have a breakout on Qs, but it's faking out right now, and it has a very nasty setup here that could potentially trigger downside. So it's been consolidating in this area here. Uh, let's say something like let's do the full candle. So something like this. So we could potentially see at a minimum a 55 EMA retest when we get rejected from here. And if it holds here, the structure is still intact. We haven't broken down. But if it breaks down, we have potential for quite a bit of downside. I don't think it happens now. I'll explain everything in a second. But this is kind of the setup where we are right now. Now, macro, like the big picture I have right now is that we have started a topping process, and it will take like 2 to 3 months, but the pullback is going to be pretty big when it does come. So I'm just gonna show it on the VIX chart. And there are multiples of this that you will be able to find, but I'm just gonna use a single comparison. For example, this part here. So basically, we were making higher lows and had several spikes on the way up, but then we broke down, and this became resistance. We went lower on the VIX, and then we start the build up towards a big move in which we resume the higher low trend until eventually we have a very, very big pop. So basically this, and eventually it blows up. And in this scenario, it took from December until April. Like this was the April one. This was the first leg of the move down in April. This was the second one. And what is to take from here is basically this structure, basically a VIX breakdown, confirm confirm of the breakdown, make new low, and then a series of pops that escalate in size. Usually, this one is an exception, or not an exception. This one is unusual that the first one was pretty big, but eventually we get a build up towards the pop. I think this one will be quicker. It won't take up until April. Will be faster, and this is exactly what we are seeing now. Basically, we had higher lows on VIX. We have a breakdown below it. We have a confirmation of the breakdown and new lows. And now we begin the process of topping out that will take up to several months. Could be quicker, could be longer, in which we will see a series of pops along the way that will come from this. Let's say maybe we go to 18, maybe we go as high as 20 on this one. I don't know. It depends on if we keep it, if it happens over a day or two. But it should always fade. But then whenever we hit the VIX low, the new trend line low, it will it will hold, and eventually we have another pop, and we get that escalation at some point. I think during Q1. Again, I drew it very long here, but I think it's going to be a quick one, meaning by end of March we will get it, and we have 2.5 months basically at most. And that's kind of the setup I think we are into that bigger correction we will get in Q1. And There are multiple reasons for this, aside from this technical setup that I see forming as of now, is that I think it's visible that Trump has begun pushing all the buttons. And it's do or die on whether the US system does something to stop him. I won't use this JPOW thing as an excuse. It's sort of irrelevant. But the thing with defending that ICE guy who shot the woman in Minnesota, that's fucked up as shit. Then we have the tariff ruling that is coming up. So the mechanisms or the initiation moves in the Trump pushback have been initiated, and now it's a matter of who wins. And most likely it's going to be a back and forth on who wins and who loses. But the setup is quite volatile going into the next 2 3 months, and I don't think the market will make significant new highs in this scenario. It will, however, do a lot of swings. Like for example, imagine that Qs go down here, and again we don't get a big breakdown, but we go down and we spike, and that's kind of it. But overall, the market should remain bullish in this period. Like let's go back to VIX and let's compare how it behaved in that interval where I made the analogy. So we do new chart, we do regular to see the price, and for example here. So this was we are basically here. Nearing the first pop, and this SPY was at 607, and on this first pop it went to 586. So not like 20 drop in price, which is basically nothing. And mm, and then VIX made new higher low. Market did not do that, and it went as low as 580. Again, like $25 drop, not that much, and eventually it went higher. But like this type of behavior in which the market tries to go down, it doesn't really go down. It recovers, goes slightly higher, sideways, upish, with some pullbacks in between. And this is kind of the scenario I see. Before the eventual thing, like even here, the first leg down came relatively quickly, like this was December 5th, and the start of the first leg down before the tariff second leg, it came on February 19th, so 2 months. And it was substantial. Like this one went from 613 to 553, so like 10% almost. So actually 10%. And the second leg, another 10%. That this may appear or may not appear in our environment as well, or it can vary in size. Obviously, like maybe we get a first leg down of like 7-8%, then another leg down of 7-8% as well. I don't think it will be 20% unless something more drastic happens. So this is the I think the identical setup we are going into this. At the beginning of the year, I posted some analogies to 1999. I will check on this periodically to see which one lines up better. 1991 doesn't seem one. We're not that volatile. We're not breaking out really. 2000, same thing. We haven't really gone down quite yet. This one is missing. We could potentially go down, but this is way too much, way too quickly. So I don't think it's going to happen. We don't have the setup for it. And the one that actually looks pretty good to what I'm imagining is the 2007 one, in which we get a series of mm, potentially retests of this 55 EMA like we see here as well. Like if we extend the 55 EMA, we see this move down, test it a couple of times. We kind of go up, but not really. Like we barely go above 7K because we keep getting down. Like every time we try to go up and break out for real, it's just another pullback. Another thing happens and we go down. So I think this is quite likely to be the setup we have as well. This is until February 12th, and then we go to 650, so almost a 10% correction, slightly low, like 7-8, like I said. And then it depends what happens at that point. Maybe I don't know, some fucked up shit happens. If some fucked up shit happens, like equivalent to the April tariff announcement, we could potentially get another leg down. We could potentially start a big rally if things calm down. We shall see. But for now, this 2000 analogy seems like the best one. On top of it, we have that calendar iron condor that I saw being placed in the market at the end of the year, which basically they are short the March end of March 7195 and 6555 6515, sorry. So they are short and most likely long the May ones. So this is a bet that assumes that we will not go above this orange line at the top, and we will not go above this or below this orange line at the bottom. And these internal ones are longs both. So they want us to basically close between the yellow and the orange line, either up or down. So that's kind of the play here. So they at one point after the 331 ones expire, this will continue existing, and after that interval, they expect it to go either higher or lower outside of the range of the yellow lines. So this is how this display is structured. Basically, short volatility in this interval, and then it's unloosed, loosed, and it can go higher. Most likely, it's a bet that it will go higher. So this is kind of how I'm thinking things will play out as well here. The timeline I'm thinking is also like mid-February, something like this for the bigger breakdown. And this correlates pretty much to my thought process and how I see things playing out. Then the thing to note here, I put the ATR levels on the yearly for IWM here. We can see that IWM went up a lot relative to the start of the year. So we are already up, what, 6.49%, or not up right now, but 584% on IWM at the beginning of the year. So this paints a picture in which the market is favoring IWM. We're also at a resistance at the broadening formation here. But even though we might see IWM fall more, right now it's not happening. But I think very much likely that it will hold on the open here at 245, and this is the place where we should long. If we keep relative strength in IWM, I would expect we bounce here, like the 255, and then we form something here and it goes higher. So I think basically in this scenario, as well as we go into the February build up and potential bigger correction, I think it's very likely that we will see IWM outperforming anyway, and maybe it has a breakout before that. So IWM, let's say the SPY moves like I showed, not SPY, I had it on as PX. So this is the 2007. So let's say SPY moves like this. We should have Qs being the worst performer. Maybe we get a small breakdown here and it goes like to 600, all the way to 600. But either William will outperform and maybe hold this area here and maintains the long trigger. We hit the golden gate as well, which suggests that we will hit 271 this year, almost for sure, like 80% probability plus that we hit this level on IWM sometime this year. Then crypto, sort of strong, but still think it goes lower. We had those rolls on the MicroStrategy and Coin whales rolling their short call positions further out. So this is still probably in consolidation. I don't see it really going for a significant low, but the fact that it hasn't, what I expected to see was basically, where is it? It's this. So also happened, not this, also happened at the beginning of the year, and it was kind of relentless. Like it made a clear push, impulsive move up, then it corrected and it went higher. Now it's not doing that. Like it had a move up obviously, but not quite as impulsive. Clear getting rejected from the 55 EMA. Now if this thing goes below the ribbon again, it should push lower. Maybe it holds the yearly open, which would be encouraging to see because it confirms kind of the higher low kind of thing. But it's not looking very strong right now. Now, this being said, this is the overall macro context. So we have the VIX setup, we have the market setup into Q1 with the short iron condor, we have the analogy with the 2007 one. Now, how do things look like short term? Well, we have economic data. Tomorrow, CPI and then PPI and retail sales. And I still think we get soft prints. So I'm kind of thinking this is going to be a one-off today. It may go lower today, but we don't have a lot more downside. Maybe like this 685 thing. If it goes really crazy, like we could hit that 681 today. Let's say it will only take a double up of this. So it depends how today ends, but the closer we are towards 680 today, the more likely the more inclined I will be to buying the dip. The thing is, because the economic data tomorrow is pre-market, you don't really get a chance to buy it. So even if let's say we don't close much lower, like we go to like 685, let's say, and tomorrow we get continuation down pre-market and go to 680, like here. I expect this to happen pre-market before the CPI print. And when the CPI print comes in, we just rally off it and go higher. So this part here that could potentially see the 680 move that doesn't happen today but could happen pre-market tomorrow, it's unlikely that we will catch it unless the CPI print is very nasty, which again is unlikely because they manipulate the data. Plus, even if it's not manipulated, I still expect that we will get a soft CPI print into because we have still the effects of the shutdown. So this kind of means that today is a buy the dip day. We can also see like how oversold we already got on the 30 minutes. Let's do the hourly. Still a bit of room. So yeah, that's kind of the setup here. And on the other side, we have for example, China going crazy. This is CSI, which one is it? 1,000 and like plus 2.8 day. The other ones haven't gone that up that much yet, but it's pretty strong. Nikkei plus 3% day. I don't know what's happening here, but wait, why is this Tuesday? Oh no, January. Why is this Tuesday? Where are we getting the data from January 13th, which is tomorrow, when it's still January 12th? Maybe Japan moved into a new day or something. Maybe it's a mistake anyway. But anyway, 3% day. Then we have Kospi, which went up significantly, like the breakdown for Kospi stuck. And this has been correlated with QQQs quite a lot. Like if we had Qs, but right now they have the correlated. Maybe a sign of was to come for Qs eventually, but not quite yet. Then we have Europe, which had upside breakouts. This is the Netherlands one, the French one, new all-time highs. DAX sustained breakout and went higher. Spanish one keeps going higher. SSXP, this is the Stoxx 600, keeps going higher, and so on and so on. So everything kind of looking good, and I would associate this fact that Europe is going higher with more like with IWM, and China will still act as a safe haven, but US is kind of funky because of Trump. So let's get back to the forecast for the short term. So for today, not invert, regular, or for today and for this week. Let's draw it up. Tuesday, Wednesday, Thursday. No, this is Friday. Oh, also yearly OPEX. I forgot about this one. Yearly OPEX for the indexes is not that important, but many individual names will continue will have very large expiration, especially FANGs. And for FANGs, They are looking kind of nasty, like Apple keeps going lower and whatnot. But the point you should be considering is that once this week is done, the downside pressure on price is going to be done. So my expectation is, assuming we continue going lower for some reason, we should be seeing this kind of pattern. Like go here for Apple, for example. This is a 100% buy, a deep buy. Nvidia could also be going like to 170, 100% a deep buy. Google is outperforming, but maybe goes back to 310, and so on and so on. So they all look pretty good, even if we go to continue going lower this week. It's 100% a deep buy, as the downside pressure created by the feedback loop of yearly OPEX on these names will be going away. So not necessarily that they will be super good buys and going much higher, although that could happen. Is that the negative pressure that keeps pushing them down will go away, and that will allow them to go higher. So yeah, that's also why I think even if we continue going lower, we will get a bounce, and this won't be a sustained move down. Now we are down 0.72%. This could be the end of it. The minimum I see possible is like 681, but like I said, this should only happen pre-market, and I think we get a bounce, so you won't be able to buy it if we do get it. And tomorrow, because CPI is going to be okay, we should be going higher and start going higher. So I think we get to 700 for sure before the big correction comes. Question is just where to buy the dip. And I'm thinking, if we get like more than 1%, like 1.5% ish, something like this, I'm buying the dip 100%. I'm hoping to get 680, but if not, so be it. And I think we kind of play out like this. Not necessarily this week, so I kind of expect it's going to be much more volatile. Something like, let's say, come on, like this, maybe the and this 700 target is quite questionable for this week. It could not happen this week. It could come later on, but let's keep it like this. And this is kind of the forecast. So yeah, that's it for this week. Hope it made sense for you guys. Have a good one. Bye bye.